Welcome to another episode of The Brand Called You, a podcast and podcast show that brings you leadership lessons, knowledge, experience, and wisdom from thousands of successful individuals from around the world. I'm your host, Ashutosh Garg, and today I'm delighted to welcome a very senior and respected banking and technology professional from Tokyo, Japan, Steve Monaghan. Steve, welcome to the show.
Thank you very much, Ashutosh. And a very senior doesn't mean that I'm really, really old. We've just established that.
Absolutely. Absolutely. No, I'm much older than you are. Steve is the executive chairman of Human AI Private Limited. He was the earlier founding chief innovation officer for DBS Bank and has worked with Dell, Compaq, Citigroup, OCBC, Shincell, DBS Bank, Riyadh Bank, and AIA. So, Steve, before we talk about banking, artificial intelligence, and fintech, tell me about your own amazing journey.
Ashutosh, where to begin? I think I've been incredibly lucky just to work with some really good people through my life. And as you know, we've both had exposure to Citibank folks who worked amongst some of the brightest minds in the world back then. But I began in the aviation industry, and the way I like to think of it in the modern context is, I used to have to customize myself to fit with the machine. Today, we're at the opposite end of that spectrum in AI, where now the AI is adapting itself to every individual. But I came out of aviation and I taught myself a new technology at the time, which does make me old. It was Lotus 123. And very few people actually understood it. But I started developing quoting models and all that sort of thing. And I would fly at night and run the business during the day, and business boomed. And so I learned a very valuable lesson right at the very beginning of my career, which is that technology arbitrages time. And as I then moved across into the software industry, and people started building front ends around my logic models. And then I moved in and to Dell and had the opportunity to help open up Dell across Asia Pacific and build their pricing models and run their product groups. And I started to see, as you start moving between industries, how there's a lot of commonality in the way that you apply technology and the way that you run business. So I went from the hardware industry, software industry, hardware industry, and the technology space. And then I moved across to banking. I asked Citigroup, after working in India, to turn around the business for a Compaq, which was number 4 unprofitable. And I was had a very generous boss who said, you can either fix or close it, and close isn't the option. So I went over and spent some time, and I really tried to understand the Indian market through observation. Then I met, and of course, some very, very smart folks over there. And then I took all my lessons back and then reconfigured the product to the financial supply chain. And we went from number 4 in the market to number 1 overnight. And within a quarter. That's overnight in tech terms. And I just checked actually before we spoke, and HP, who bought Compaq, is now still number 1 in India. Absolutely. So I was quite surprised. But it seemed to have left a lasting legacy, being able to deconstruct cost and finance and then reorganize and design product to fit with financial optimization. And then I moved, of course, into banking and had some great experiences at DBS and OCBC, Riyadh, etc. And now I'm lucky to sit on the board of a bank in the UAE, which gives me my first view across an entire organization from a governance standpoint, which has been a fascinating and rewarding journey. And I'm at that stage in life now where I'm really appreciative of what I've been through. I've invested in lots of companies and things now, and now I think, like yourself, I'm looking at how do I give back. So I'm looking now at the field of economic transformation, pretty much the same MO.
Fascinating. And tell me a little bit about Human AI Private Limited.
So Human AI is a new company. It's still pretty much under wraps, but what we're looking at doing is working out how to improve the economics of an economy by accelerating the velocity of money in that economy. And when you run through that, you come up against some really interesting paradigms. For instance, most executives across Asia Pacific are paid every 30 days, which effectively means, if I look at it from a clinical transaction standpoint, that they're creditors to their companies for 30 days. They're giving up their cash flow for the company. And when you deconstruct that, you realize that, if you actually had that cash flow, you would pay off your 30-year mortgage 5 years earlier, a whole range of things. And that money flows from high cost individual credit to very low cost, multinational credit or government. If you're a government worker, you're actually, Japanese government bonds, etc. So the funding costs are much lower. So you've got this pure capital destruction layer baked into every economy around the world, which disadvantages the poorest. And I want to change that because it makes no sense in the modern world. And the tools, legislation, etc., is all in place to go and fix it. What isn't there is the knowledge, and that's the piece that I'm focused on now.
Amazing. So we may just start to see our salaries coming in every day now,
Every second of every
Every
day.
Amazing.
That's our objective.
Fascinating. So, Steve, let's talk a little bit about AI, banking, and finance. With the kind of focus that artificial intelligence is getting around the world, how do you see AI shaping the banking and finance sectors?
I always look upon AI as not so much artificial, but augmented intelligence.
Okay.
And I think that, what has created this, banking system as we know it today is, generations of very smart people. And what we need to do with AI and technology in general is to encode that knowledge and scale it. The difference in banking versus the technology industry is this is what we expect to do in the technology industry. And so we will actively, reduce our revenue, our revenue or our prices with the view of being able to make it up on the growth side. Very few financial institutions actually have that growth mindset. And I think that, that is one of the limitations of what's possible with technology is more the human factor than, what it's actually capable of. But AI is really an additional scaling mechanism to work out how you can take the best and the brightest and really scale that output, to the market. And the way that I really like to think about it is you have, these huge repositories of data in financial institutions which sit there as an expense on the balance sheet. And what AI gives us the opportunity to do is to take that data and make it valuable, not just for the company, but also for our customers. And the moment that you start, particularly with the customer value in mind, then that gets you into the growth mindset frame, in addition to, really being able to scale that benefit and create the right controls around that data that protects consumer interest.
Fascinating. And therefore, your response gives me the segue to my next question, which is, how do you see AI transforming customer experience?
That's a really interesting one. I think that, from what I've studied over many years and taking inspiration from some of the great tech leaders is, looking at the psychology of why we buy. And we buy as human beings, we make emotional decisions, we justify them with logic, and we take action when it's easy. So I call that ESE: experience, the emotional engagement; simplicity, which is cognitive; and ease, which is effort. Minimum type swipes, words. What AI does is, if you think about the way we were designing customer experiences just, a year ago, it's very different now. Because in the same way that Steve Jobs changed the interaction model with swipes for technology and made that technology accessible to two new generations of users, young kids and older folks. AI is actually doing that at a whole new level, being able to actually, customize response at every level to every type of person, be it an 8-year-old or a 60-year-old. And what's interesting about AI and customer experience is actually that I think old people, for the first time in technology, have an advantage because they know how to ask the right questions.
Amazing.
So I think it's a very interesting shift from a customer experience standpoint.
Amazing. What a great response. Thank you. The other question, Steve, that I've often asked people in technology and in AI is, what are the ethical considerations that need to be taken into account while implementing AI in financial services?
I think that is not just restricted to financial services. I think there's a book that was recently released by Mustafa Suleyman, who was one of the co-founders of DeepMind. And he does a great job in covering off all of those, tensions, natural tensions between how you use technology for good and evil, in the same way as we experience technology today with cybercrime and also the benefits that it brings. But I think really the ethical consideration for me is always to make sure that if your first objective is looking at, your value to the customer, then that kind of guides and constrains you to ethical exploit, right? So if your objective is for your own benefit as your primary, then chances are you're not going to end up with the same sort of outcome.
Mm.
And that places additional risk in the system.
Mm.
So I think that, obviously with any AI development, if you start with, I always call it time to value, then time to market, and then time to scale.
Mhm.
So if you start with that time to value, value point one is there value for the customer? And unless you get to the value for the customer, don't do it, because then
Mm.
it's not going to be valuable for you. Then go down the route of, looking at how you use that to create value
Mm. Mm.
for the company, and then for the other stakeholders.
Mm.
So, I think if you basically have a culture and ethos that begins at that level, then you're well placed to stick and create the appropriate ethical fences around the use of AI, because like any technology, it can be used for good or evil.
Mm. Well said. And what are some of the emerging trends in digital banking that you are personally most excited about?
I think we're about to embark on a fundamental shift from productivity to optimization, facilitation to optimization, if you'd like to think of it that way. We've focused how to make things faster and easier, but we haven't really started to take the financial expertise
Mm.
and put that in the customer's hands yet. So we've given customers tools to make their banking easier, but we haven't really helped them maximize the value of finance, because banking sits at the very heart of that. And that's what is particularly exciting for me, is looking at that whole financial optimization piece. And I think, in line with what I'm doing at Human AI, the focus of being able to use finance in a smart way
Mm.
could benefit billions of people around the world. And
Mm.
that really excites me.
Mm. Very interesting. Steve, you're also an investor in many organizations. Um, when you look at investing in multiple companies, what do you look for before you make an investment? And a follow-up question, how do you balance risk?
That's a phenomenal question. I wish I had the correct answers, so
Mhm.
I can only answer with my own answers.
Yeah.
The first thing I actually look for in a founder is humility and then grit.
Mm.
If you're not humble, you can't learn. And this space is moving so fast. If you can't learn, then you're not in the game to begin
Mm.
with.
Mm.
Um, every startup that I know or have invested in, friends, directly, or friends that have, etc., they've all had their moments where they've almost died.
Mhm.
And in reality, experiential learning is the most powerful form of learning. So if you can get a company through that, you've usually paved the way for, later greatness.
Mm.
And I've seen, at every stage of that process, right up to pre-IPO, companies almost fail,
Mm.
never due to, foreseeable. It's like an air accident. There are all these little pieces that kind of add up,
Mm.
and then, the serendipity at one point takes control.
Right.
Um, so I really look for entrepreneurs that can be responsive to that. And then I look at the quality of the business, and does it fit something that fits within my view of what's needed in the world?
Mm.
Then how could we help to, scale and get the company to actually achieve that objective?
Mm.
And they're the primary things that I
Mm.
look for.
Mhm.
So part of it's driven by my own interest in solutioning, and the other part is
Mm.
driven by my interest in the entrepreneur.
Mm. And are there any sectors that you like to stay in, or are you sector agnostic?
I'm relatively sector agnostic. I've
Mm.
focused in on fintech lately,
Okay.
but I was in health tech and I love that. And
Mm.
I did invest in a great entrepreneur that unfortunately had to sell the company in the latest downturn,
Mhm.
even though what he was doing was brilliant. He was very early stage into microRNA, but from a hardware perspective, and creating some of the tool sets which
Mm.
will go on to go and save lives. I primarily invested, in, with the other folks I invested with, I said our worst possible outcome is we're going to save lives,
Mm.
and that mission accomplished.
Mm.
But I really felt for the entrepreneur, having put in 7 years, and it was because his father had died of pancreatic cancer.
Mm.
So he was really mission driven, and to see that weight being borne by him
Right.
was a really really tough thing to observe. But I think his technology will live on, and he's still working for the acquiring company.
Nice.
But it would have been great to see that go all the way through.
Fabulous. And how does your experience as a banker influence your decisions as an entrepreneur?
That's an interesting question. I think what banking did for me is give me a more holistic outlook on the whole network of
Mhm.
finance. In the tech industry, I understood those networks quite well from a tech perspective, but I hadn't really looked at how that ecosystem interacts and how economies operate, and et cetera. So when I take that knowledge as a banker, I think the number one discipline that I've taken with me is risk management.
Mm,
I'm very, very conscious around risks to a business. There's always that fine line between letting an entrepreneur run versus, looking at how you put that right risk framework. But when risk happens, it happens very quickly. So often, it's around preparation, not necessarily remediation.
mm,
And that's probably the most important lesson that I've taken from banking into entrepreneurial land.
mm. Fascinating. And what, in your view, is the role FinTech can play in promoting financial inclusion?
Financial inclusion, I used to work on microfinance portfolios,
Mhm.
which I found fascinating. And I just thought it was, this is a problem that could be solved.
Mm,
I think there are two things that drive that. And one thing that FinTech is very clearly aimed at
yeah.
is cost to serve. The moment you can get the cost to serve down and remove all of that friction, then you're in a much better place.
Mm,
The second is the piece that I'm trying to work on now, which is looking at my view is if you want to get the poor out of poverty, pay
mm,
them. The
mm,
moment you don't pay them, they have to take out very high cost debt to
mm,
get through till payday.
mm,
So the biggest thing we could actually do is actually realign that paradigm, and that
mm,
hasn't happened yet. And what's interesting about that, if you take Japan as an instance, and this isn't certainly prevalent in a lot of the emerging
mhm,
markets, but in most mature markets, the government actually guarantees employee income, which means it's actually the lowest cost risk,
mm.
but yet these individuals are paying the highest cost for their debt.
Right.
And and I find that a very interesting inefficiency to go and solve at a different level where you don't have that sort of regulation,
Mm,
still with the right insolvency laws and with a basic framework of law, it's
mm,
still very safe debt on the income side.
mm,
So as long as you find solutions for that, you'll still be advantaged in those markets.
mm,
So that's the whole area that I'm really focused on now, to look at how you solve this very obvious inefficiency when you articulate it. But
mm.
again, when it's not been done before, the first answer everyone gives you is no.
Yeah.
And I view my entire role in my career as turning no into now, which is the
No.
same four letters
Yeah.
throughout.
Yeah. Yeah. Fascinating. So I've got time for two more questions for you. My next question is, what new technology-driven financial solutions, in your view, are the most promising?
I think the most interesting ones are that focus on increasing value for the customer and increasing their financial wherewithal. I think that right now we've focused, as I've discussed, very much internally. And I think the moment that we now look at creating that efficiency outside and in the customer's hands, then this is the most interesting area for me. And there are quite a few fintechs that do look at how to increase the value equation for
Mm,
individuals. But I see that happening at a much bigger scale with what's happening in AI.
mm, mm. And my last question to you, Stephen, this is for the many people who will listen to our conversation. A lot of them are startup entrepreneurs. Based on your understanding of technology, of finance, fintech, risk, and your being an investor in so many different startups, what would you say are three lessons for a startup founder?
The biggest lessons are, to temper your enthusiasm with reality.
Mm,
I mean, reality is a very hard thing. You have this very clear vision of what's happening in the future,
mm,
or what's possible in the future, but you have to be very grounded in the reality of
mm,
today.
mm,
And so patience sounds like a bad word for an
mm.
entrepreneur, but I
Yeah.
really think it's important because while you've got to hustle and make things happen, you also have the patience to make sure that you're putting the right things in place to be successful. And so that would be number one.
Yeah.
The second is, it's as important to stay focused on what's going on around you as it is on what's happening in your business. Because technology is moving so quickly, your chance of missing a market without continuous adaptation is very high. So it's to really focus on what's important. And it's very easy to try and rush solutions to market to bridge that gap, but you always end up paying that price later. So if you can really focus in and look at how you build quality from the ground up, I think that's equally important.
Fascinating. And on that note, Steve, and your wonderful lessons, temper enthusiasm with reality, patience is very critical. And third one you said was stay focused. Thank you so much for speaking to me about your one amazing journey. I loved how many different sectors and how many different industries you have worked in. And you seem to have brought it all together in Human AI Private Limited and all the support you're giving to so many startups. Thank you for talking to me about banking, augmented intelligence, AI and other factors, about investors, startups, and FinTech. Thank you again, and good luck.
Thank you, Ashutosh. And I think your own background is far more interesting than my own, but appreciate the chance to speak with you.
Thank you so much. Thank you for listening to the Brand Called You videocast and podcast, a platform that brings you knowledge, experience, and wisdom of hundreds of successful individuals from around the world. Do visit our website www.tbcy.in to watch and listen to the stories of many more individuals. You can also follow us on YouTube, Facebook, Instagram, and Twitter. Just search for the Brand Called You.